Hi friends, in my last video 5 budget stocks, I could only cover 3 stocks because of the video getting really long, but in this video I'm going to cover the remaining stocks. And this video is all about rural theme because in the last 1 to 2 years, rural consumption in India has been really sluggish, mainly because of high inflation, bad monsoon in 2023 and so on. And it has impacted few sectors and therefore the stocks operating in these sectors have hardly moved if you compare them with Nifty 50. So for example, sectors such as fertilizers, FMCG sector, rural infrastructure and so on. And therefore, if government announces conducive policies for rural consumption, then the sectors that have been very down in the last 1 to 2 years might see some recovery, and therefore I am going to cover that in this video. Now, nobody can guarantee whether the government will announce right policies for the rural consumption or not, but the early signs are very encouraging. For example, as soon as PM Modi took charge of the office, he released the Kisan Nidhi installment worth 20,000 crores for farmers. Also, in the interim budget, approximately 1,27,000 crore was earmarked for the agriculture and the rural recovery. So in this video, I am going to cover 3 sectors and 3 stocks operating in those 3 sectors. With that, let's get this video started. The first sector that I want to pick up is fertilizer sector. There are more than 30 to 40 stocks operating in fertilizer sector, and the key question is which stocks we need to pick up when it comes to fertilizer sector. Because what we don't want to do is we end up picking stocks that are going to rally after the budget, but afterwards they have no bright future. Therefore, we need to really think about stocks that have a longevity. Now for this, have a look at my screen and you will see that our finance minister announced nano DAP application. Now this is a hypercritical point that you need to understand if you want to ever take a bet in the fertilizer sector. So why is government expanding nano DAP application? Simple reason is that they want to reduce the subsidies that the government is giving. Read this here, lighten the subsidy budget. Allow me 1 to 2 minutes of time. You really need to understand this hypercritical point about the nano DAP applications. If I take you to the Indian fertilizer market, you will quickly notice is that 58% of fertilizers are urea driven fertilizers as of 2023. Urea has 2 big problems that the government is trying to solve. Problem number 1 is that we are not self-sufficient when it comes to urea production. If you look at this data, you will see that we sold around 59 million metric tons of urea in FY24, and out of which 17.7 was imported from other countries. So almost 30% of urea needs are met by importing the urea. Now, when we are importing urea, what is happening is the cost of urea is very high and our farmers can't really afford that much of cost. Therefore, what government is doing is government has been providing subsidy for urea, and if you see the data here, you will see in 24-25, the estimates are around 1,90,000 crores of subsidies on just urea. It's a huge monetary burden on Indian government. Therefore, Indian government is trying to reduce the use of urea. Second big problem with urea is that urea contains around 46% of nitrogen, and therefore the ratio of nitrogen, phosphorus and potassium is 46:0 and this is really bad for the soil, because the ideal ratio that is good for soil is 4:2:1. This ratio is famously called NPK ratio, which is nitrogen, phosphorus and potassium. Now, in order to overcome this problem, DAP fertilizers came into market, which are diammonium phosphate, and they contain lesser nitrogen, around 18% of nitrogen, and they have 46% of phosphorus. But very recently, nano DAP have come into picture, because nano DAP even have around 8% of nitrogen and 16% of phosphorus. So by expanding the use of nano DAP in Indian agriculture, what government is trying to do is trying to reduce this subsidy that they are giving, because 1 bottle of nano DAP is going to replace 50 kg bag of the DAP that is being currently used. So in my view, next 5 to 10 years, if you look at the fertilizer market in India, the companies that are going to come up with the nano DAP application, nano urea application are going to win the market. And I sincerely hope that this point is structurally very clear to you if you ever want to take any bets in the fertilizer segments. All this is fine, Rahul. Tell us the stocks that are going to rally. Look, I am not going to give you any recommendations, but I am going to give you 2 stocks or 2 companies that are bringing nano urea, nano DAP applications in the market very soon. First stock is Paradeep Phosphates Limited, and please request you not take these as recommendations. I am just trying to teach you in a systematic way so that you can understand where the opportunity really lies. Have a look at my screen and you will see in the last 1 year, stock has given 37% returns, but more importantly, in the last 1 month, stock has gained around 20%. So much of the gain has happened really in the last 1 month. I'll speak about why exactly the stock has picked up in the last 1 month, but more importantly, if you look at the FY24 performance of this stock, you are quickly going to notice that the revenues are down by 13%. Their net profit is down by 67%. And immediately question you will say is, Rahul, why are you talking about the stocks that have the profits down, revenues down, and so on? This is because past history is history. We need to look at the future. And if you look at the future, what PPL is going to do is they are going to launch nano urea that contains 8% nitrogen and nano DAP that includes 6% nitrogen. And I have explained to you the tailwinds that nano urea and nano DAP have because of the policy expansion announced by our finance minister. So what is likely to happen in next 5 to 8 years is that urea or DAP applications are going to phase out and they will be replaced by nano urea, nano DAP and such fertilizers, and companies that are operating and bringing offerings and products like this are likely to thrive more than any other traditional companies. The Paradeep Phosphate Limited is not only one stock. The second stock that I want to talk about is Coromandel International Limited. Have a look at my screen and you will see in the last 1 year stock has moved 67%. And if you look at the FY24 performance of Coromandel as well, you will see the revenues are down by 26%. The profit after tax is down by 18%, slightly better than Paradeep Phosphate in terms of the performance. But overall, if you see, majority of the fertilizer stocks have had a bad year in FY 2024, likely to improve in FY 25 and 26 depending on what happens in the budget, what happens in terms of the continuation of the policies. Now Coromandel International Limited is one step ahead of Paradeep Phosphate Limited because they have already launched their nano DAP application last year, and in fact they started to share it with the farmers as well. They are now waiting for the final regulatory approval to go ahead and commercially produce nano DAP applications, which is where I think this is one step ahead of Paradeep Phosphate Limited. Now, if we compare these two stocks in terms of valuation and ROC and ROE, etc., you will see that Coromandel's PE is at 28 versus 34, PB is at 5.02 versus 2.41 of industry PB, while Paradeep is trading at around 73p, much higher than Coromandel. But from a book value perspective, it is still lower than the industry. If we compare the ROCE percentage, Coromandel is at 26%, which is very good number as compared to Paradeep, which is at 6.44%. If you look at the last 3 years of average ROCE, there also Coromandel is at 33%, while Paradeep is at around 10.87%. ROE perspective, if you consider, it is at 18% Coromandel and Paradeep is at 2.83%. So fundamentally, Coromandel looks slightly better in terms of numbers and also from a valuation perspective. Now, I'm not saying that go and buy these stocks. Please do not take this as a stock recommendation, but I have given you a very systematic way of finding the stocks in a particular sector that has not been performing well. Last point about fertilizers is that GST is a major driver when it comes to stock movements, because if you see 19th of June, the fertilizer stocks rally up to 15% because there was a speculation that the GST Council is going to remove the 5% GST on fertilizers. But guess what? That was just a speculation. It didn't really happen. And when GST Council deferred the decision to the ministry, what happened was the stock tanked by around 9%, as you can see on my screen. So GST is a big mover when it comes to prices up or down. I don't know whether fertilizers will be exempted from GST or not. It really depends on government, but whenever that is likely to happen, 10 to 15% of rally is likely to be seen in these stocks. Before I move to stock number 2 and sector 2, if you like this analysis, request you to hit the like button. Let me know in the comments a simple thank you. It will motivate me to come up with such content for you at zero cost. Also, you can consider subscribing to my YouTube member community if you really want to understand the right way of investing. Try it for 1 month, and if it helps you in investing, then you continue to become a long-term member. With that, let's move to stock number 2. The second stock that I want to speak about is Finolex Industries Limited. Have a look at my screen and you will see the stock has given around 80% returns in the last 1 year. Majority of this return has come only from April, May, June time frame. So last 3 months, the stock has seen a massive rally. I'll explain to you why the stock has moved like this in the last 3 months. But right now the stock has been softening from around 350 levels to almost 322 rupees level. Now, if you look at the company, this company manufactures pipes and fittings, and you see they operate in 2 sectors. One is agriculture and second is plumbing and sanitation. When it comes to plumbing and sanitation, construction sector has been on boom in the last couple of years in India. Therefore, the demand is still looking very, very good. So in my view, that is likely to really help this company. And secondly, when it comes to agriculture segment, it really depends on what government policies we see in the next few months. And if there are conducive policies, then the demand from agriculture sector might also see some uplift. Now, if I talk about how much of the revenues come from agriculture versus plumbing and sanitation or non-agri, the management says that right now around 70% of their revenues are coming from agri sector and remaining 30% is coming from non-agri sector, and they are guiding that in the next 3 to 4 years it is likely to be around 50-50 split. Now, few hypercritical points that we need to know about this particular company. Please allow 2 to 3 minutes of time. Number one is that the profitability of this business. Have a look at my screen and you will see that in 2024 their revenues were flat, in fact down by 1.8%. But if you look at the EBITDA margin, it was up by 99.9%. Also, if you look at the PAT, it was up by 92%. And I really like those stocks where the profit is growing faster than the stock gains. So the stock has gained around 80%, but the profit has gone up by around 92%. But the question is, what is moving this EBITDA? And if you see what the company is saying is the materials consumed has really helped them by around 335 crores, which is the major contributor in terms of helping the EBITDA very, very high. So the materials, the raw materials the company has consumed, here the cost of the raw material have been down in the last 1 year. That has helped them in achieving the profitability. Secondly, the MD of Finolex Industries says that the better product mix is also helping them in profitability, which is that they are focusing on non-agri segment. And if I reiterate the fact that in the next 3 to 5 years, they are going to go for 50-50 allocation, then in my view, the profitability is likely to be intact. Second hypercritical point that we really need to note about this stock is that back in 2022, the stock has shown very high profits, around 1,530 crores rupees of profits. And this was mainly due to very high prices of PVC. And if, as you can see on my screen, back in 2021, throughout the 2021 and 2022, the PVC prices were very, very high. That really helps this company in terms of achieving the profitability. Now comes hypercritical point number 3, which is around the cash position of this company. And as of March 2024, company was sitting at around 1,820 crores of net cash. And around 6 months back, when their management was asked that you're sitting on a cash of around 1,500 crore at that time, what are you planning to do with this cash? The management said that we are looking to find some investment avenues, and if we are not able to find any investment avenues, then what are we likely to do? We are likely to give this money back to our shareholders. So I will not be surprised if I see initiatives such as buyback or bonus stocks or dividends and things like that to benefit the shareholders. So this is a massive benefit I see in this particular stock. Again, not a stock recommendation here. I'm just speaking to the data and sort of trying to help you understand where the company is really going. Now comes the fourth hypercritical point, that why the stock has been rallying in the last 3 months. For that, if I show you this data here, that the stock jumped 12% because of the guidance of the volume. So if you remember, last year the volume was down or the revenues were down, but now the company is projecting around 10 to 12% of volume growth for FY25. Therefore, the market is starting to give some attention to this particular stock. If you look at the shareholding pattern, then it's a pretty much stable pattern that you can see. Promoters still hold 52.47%. FIs and DIs have also taken some reasonable positions in this particular stock. Lastly, from a valuation perspective, if you see, it is trading at around 42p versus the industry P of 37, slightly on the higher side. But from a PB perspective, 3.53 versus 3.96, not highly overvalued as compared to many other stocks, for example, Supreme Industries, Astral, which are trading at crazy P's of 70s and 113 and whatnot. Again, please do not take this as a stock recommendation. Again, I have given you some views about this particular stock. Go and do some more research before you take any bets. And so far, if you're liking this analysis, just hit the like button. Let me know in the comments. A simple thank you. With that, let's move to stock number 3. The third stock that I want to speak about has tailwinds from rural consumption as well as urban consumption. Allow me 2 to 3 minutes of time and you're going to learn a lot about this stock. So if the government is going to announce the policies that may help increase the rural consumption, then this is going to be positive news for this particular stock. But more importantly, the second tailwind that I see here is that if government take any action on the income tax relief that many of us are waiting for, then what is likely to happen is that the consumption pattern for the urban consumers will also increase. And that's what many people like, for example, MD of Marico is saying here. The stock that I'm speaking about is not Marico here. The stock I'm speaking about is Hindustan Unilever Limited. If you see the chart of this stock, in the last 3 years, this stock has hardly moved, while if you compare this with Nifty 50, Nifty 50 has given very, very good returns in the last 3 years. Not only the price movement, if I show you the PE ratio of this stock in the last 3 years, you will see back in 2021, the PE used to be at around 80. Now it has come down to 60, which is the median PE. If I show you the price to book ratio, again, back in September 2021, it used to trade at around 13 price to book ratio. Right now, it is come down to around 12 price to book ratio. That is around median PB. So the stock is not highly overvalued in my view. Also, the stock has not really moved much in the last 3 years. Also, if you do a pair comparison, you will see the PE ratio of Hindustan Unilever is at around 60, same at industry level or slightly lower than the industry level. But the PB of this stock is at around 12, while the industry industry PB is at around 34. So almost 1/3 of the industry PB is what it is trading at right now. And the key reason for this has been that in the last few years, the stock has not really performed well when it comes to the top line as well as the bottom line. Have a look at my screen and you will see in FY24, the sales growth has been around 3%, low single digit. Also the PAT has been 4% growth only, again low single digit. And if you see all the three segments that the company operates in, home care, beauty and personal care, food and refreshment, there's a low single digit growth around 3% to 2% to 4%. Now please know that HUL's 40% business revenues are coming from rural sector and 60% is coming from urban. There are three tailwinds I see for this particular stock in the next 1 year or so. Number one is RBI rate cuts. So if the RBI rate cuts happen, what is likely to happen is that the home loan rates are going to get really cheaper, and middle class people who have loans, floating rate basis loans, they are going to see some savings in their pockets. And when that happens is that what happens is the consumption of the FMCG products is likely to go up, and that may help stocks like HUL. Point number two is the tax relief that we spoke about earlier, that if the government provides some tax relief, then again that is likely to help boost the consumption in both urban as well as rural areas, and therefore the FMCG product sales are likely to be better than what it has been in FY 2024. And thirdly, it's all about the rural consumption really. If the government announces policies that helps creating jobs as well as the policies that will help farmers, then what is likely to happen is the FMCG sales are likely to be better than what it has been in FY24 and FY23. Therefore, HUL in my view is likely to do better than many other stocks because of the lower valuation that I see right now for HUL. Again, not a stock recommendation here. I've given you a point of view about what happens if the rural and urban consumption go up and whether this is likely to help HUL in terms of the sales and profitability or not. Now, let me know in the comments any stocks that you would like me to analyze, and more importantly, stocks that you are right now bullish about. Let me know in the comments and I would pick up those comments and try to analyze and give you upcoming videos on my channel. And if you like this video, hit the like button. Also, you can consider subscribing to my channel. I'll see you in my next video. Until then, keep rocking.